Okay, I think we kickstart. If not, we'll be taking too long. Okay, thank you so much for joining the session. Today's topic, we'll talk about Tesla, specifically on the earning release, but we won't just stop at the numbers here. We will touch on other topics depending on questions that you guys want to ask. So for those who have questions, you can unmute anytime to ask, or you can just put in your question in a Slido. We will go through later. But I think the first part, right, the first section, Maximus prepared a couple of slides, and then he's so kind, right? So he will share with us his finding. We will run through the numbers, and then we will just discuss whatever topics that will come later. So Maximus, can I pass to you now?
Yeah, sure. Thanks. So this is more a sharing session where since I crunched the numbers, then I thought maybe we can share with everyone. And also, this I think we also qualified that this one should not be a buy or sell call. It's more a case where we study the numbers together, and then there's qualitative part. I think the rest of you can fill in. Probably you know the company much better than me. So maybe just to go through the financials. So financials, earlier on I mentioned in previous session that there's three parts of the financial statements that you can see. One is the P&L, the other is the cash flow, and the balance sheet. So I think in this two slides, actually the slide 1 and 2, it shows all the numbers that I usually captured to analyze the company. So so for this case, I think I moved backwards to all the way to 2018 to 2021. So the first 4 columns you'll see how they do year-on-year basis, and how Tesla did separate the business itself is via automotive sale, energy generation and storage, and service and others. That's how they separate the three main business. But from the present, from how they present the numbers, you will see that automotive sales is what they use to subsidize, inverted commas, the energy generation and service and others to grow the other 2 pieces of business. And if you see on a quarterly to quarterly basis, and usually for companies they compare quarter on quarter, meaning first quarter of 20 versus first quarter of 21 to see how they have improved. And for my case, I think if it's not seasonal basis, then I'll do quarter on quarter as well. Meaning, let's say the last quarter, I will compare to third quarter to see whether they are improving. So if you can see the numbers from Q1 20, which I started the spreading, I mean, you can spread even further to see, but I think meaningfully, that's the part where, towards the part where they start to turn profitable. So I think that would be more meaningful to kickstart the whole analysis. So you can see that in first quarter 20, the business the profit was turning like 60 million profit net income, versus all the way to fourth quarter 21, you can see that the profit now is 2.3 billion. So you can see the progressive improvement. But I think if we look at the numbers, we should also focus on the margin itself, whether gross margin wise, as they grow, do they sacrifice the margin? And in the case of Tesla, no. You can see that the gross margin row itself has been improving all the way to fourth quarter from 20% to all the way to 27%. And in terms of operating margin, so operating margin includes all the labor costs, etc. So you can see that operating margin has been steadily improving up to 14.7%. And for operating margin, I think in the statement that Elon Musk made, he highlighted that they have the highest operating margin amongst the competitors. So I took a look at companies like Toyota. They're doing about 10% operating margin in the latest quarter. And I think Volvo is doing about 12%. So his statement is actually correct. to say that they are the highest operating gross margin. And so the other thing to look at is also in this statement of interest will be you will look at the net income per share. And for my case, I usually use the diluted one. So you can see that it's been steadily climbing. So if you want to do financial engineering, this is the part that it's not so easy to engineer, as in, so one can do more share buyback or one can do more share issuance. In this case, you can see that while the share issuance has been steadily climbing from Q1 20 from 994 million shares to all the way to 1.135 billion. But the climb isn't very steep, if you can see that. So the share dilution from new share issuance is not so bad as other companies that you can see. So this basically is what I see in the first slide. Of course, the details on the automotive sales, the energy generation, storage, and service and others, maybe later during the discussion, we can all discuss about this. So if it's okay, then no one has questions for now, then I can move on to the next slide.
Yeah, I think if you have questions, just unmute and just speak, because I can't switch back and forth between the slides and the Slido. So just unmute and unmute anytime if you have questions.
Okay, so if not, then maybe I carry on. So in the second part, for this slide itself, you will see that it's actually a break. The first two parts are the breakdown from the balance sheet itself. So balance sheet, the main three items I look at is cash and equivalent. So sometimes there's also short-term investments that company made to make better use of the cash. So you can see from this the quarter-on-quarter comparison, Tesla has been building up their cash level over period. So it will mean that either their cash flow has been generating more than sufficient, and they have no other use at the time being. So that's why the cash position has been increasing. But at the same time, if you look at the debt itself, it's been showing trend of decreasing, meaning that I think it peaked at second quarter 20, then thereafter it starts to go down all the way to 6.8 billion from a peak of about 14 billion. So you can see that they have been also using their cash to pay down the debt. And in terms of the equity, there's this equity itself could have been from share issuance or also or from accumulated profit coming in. So you can see that it has been steadily increasing all the way to 30.2 billion. So and from there, with that, right, you can see that the cash position per share, I mean, just without looking at the share price itself, just looking at the share itself, the company itself, it has for every share is backed by $9.46, and net book value is at about $26. And the other thing to see from this is the ROE, return on equity. So typically, if without doing share buyback, for this case, they have not been doing share buyback. So their equity has always been based on their profitability poured into back to the company. So you can see that it has been steadily increasing as well. I think for ROE, I think anything above 15% consider very good. And in their case, you can see that in across second quarter this year, Q1, they have been increasing above the 15% mark. So as of last quarter, they hit a high of 30.8%. And in terms of full year, it's 18.3%. So for manufacturing concern, usually the other few factors to look at is the cash conversion cycle, which I think from bank's point of analyzing books, you have your accounts receivable, inventory, and payables. So these are the days that they take to collect, the inventory to turn, to sell off, and payables, how long did they take to pay the suppliers. So you can see from the way Tesla manage, I think they have been able to get credit from their suppliers. So you can see that in fourth quarter, the credit that they are obtained from the suppliers has actually increased to about 70 days. Whereas the turnaround for their inventory is around 40 days. It's also coming down trend, which means that they are selling faster and faster. And in terms of the receivable turnover, has been coming down to 9 days, which means they can close the sale very fast. I think in this case, it's probably a retail sale. That's why the receivable turnover has been very fast. So from the cash conversion cycle, technically they do not need bank loans to run their business anymore. So bank loans in this case, or debt for them, probably is for their capex or expansion. So then come the last portion, the green portion, where we talk about cash flow. Cash flow, typically people talk about free cash flow. So in Tesla's books, they did declare the free cash flow. But for my case, what I do usually is I take a more conservative stand. But I think we also need to study deeper into the investing activities. So investing activities consist of things like capex, but it also includes things like investments or acquisition. For Tesla, I don't think they did much acquisition. But if you can see, sorry, I jumped the gun a bit. So if we follow the operating activities, you can see that that it has been since the first quarter 20, they have been building up positive cash flow. The operating cash flow has turned positive, and that's a sign. And it went from 964 million all the way to 4.6p. So they have been generating a lot of cash flow from the business itself. And this part of the cash flow is brought back via investing activity into the capex. But I do note that I think in first quarter 21, if I'm not wrong, they did the investment into Bitcoin as well. So that itself, I think, is reflected in the spike in the investing cash flow. So on top of that, if you look at the financing activities, this is the part where you see whether they do more borrowings, do share buyback, do dividend. So for Tesla, it's quite simple. They don't do much. They don't do any dividend. Share buyback is very minimal. So it's more share issuance or bank borrowings. So a positive one will show that they issue more shares or borrow more. So in the case of first quarter 20, you can see that it's still positive all the way to, I think it peaked around third quarter 20, and thereafter it starts to move towards, it starts to reduce, and from first quarter 21 onwards has been paying down. So along with that, if you look at the corresponding statement under debt, you can see that the debt has been coming down as well. So this is where you can see, just without looking at the statement itself, you can actually guess that they have been paying down their debt. And for FX, it's very minimal for this. So the other factor that I use to measure is the operating cash flow over net income. So this part is the part where you see how fast the cash flow that they get from the business versus the income. So most company, ideally, most companies should have this above 1. So, but if you look at Tesla, after the first quarter 20, they have been generating cash flow much faster than their profitability. So on net profit. So which shows and they are gradually, you can see that it has stabilized back to about 2 times. So this is something that you should watch. But once it goes to less than 1, then it shows that they are generating sales, but they are not collecting fast enough. So in Tesla case, I think collection has not been an issue so far.
So, just want to clarify. I have a question. Is the operating cash flow over net income also known as the quality of earnings?
Yes, correct.
Am I right to say that if it's above 1, then their net income is more legit, so to speak?
Correct.
Okay.
So it shows that they've been able to collect back at the money per what the net income is showing. So for a company that is doing so-called fictitious sales, or they bump up their sales, right? Because sales can be taken as accrued sales, meaning that it's receivable sales done, but under receivable, not collected yet. So when you look in the cash flow, right, such companies, right, the cash flow can become negative because they have a lot of money owing by their customer that they have not collected back. So, but this thing cannot last forever because after a while, right, the company dies not because they are not profitable, but because they can't collect back the money, the whole cash flow get jammed, and then that's the clear indicator that the business is not sustainable. So this measurement measures that in that sense.
I have related questions. I recall around second half of 2020, that's the last time when Tesla raised capital via equity issuance. And then at that time, I still remember Elon said, actually they don't need cash. But because the share price shoot up so much, right? They just say, okay, we will raise the capital, but it is mainly for like insurance, but they don't need that, right? So that's the statement given. But just looking at this, financial statement here, right? Would you say from which quarter onwards? Let's say you are the CFO. From which quarter onwards you will say that actually we don't need external financing anymore? Is it true that it really happened around, let's say, second half of 2020? Let's say you see here operating already positive, right? And you are expecting positive. Is this the turning point that they turn positive, or how do you see this?
Okay, if you say, sorry, I didn't follow them that closely, but if you say second quarter, not that visible, but it looks more visible in the third quarter where the financing activity, the 4.45B was raised. So, but I think during that period, if you recall, it was the COVID period where I think for America, and that was the maximum impact in Q2 20. So companies during that period, right, tend to, if they can raise cash, they will raise cash to keep the liquidity just in case. So the statement that he made may be true because during that period, there's a lot of uncertainty. So you don't know how long how the situation will evolve. So the best way for companies during that period was to do more bank borrowings or raise more cash to keep the company so-called in very good liquidity position, so that if the crisis prolong, right, they have the cash flow to last through.
Thank you. Is there any other questions? If not, we will move. Is there one more slide, right?
Yeah, there's one more. So, okay, the last slide is just a statement made by him. So, for me, I think this is the part where it gives the forecast going forward for the company. So you can see that in this statement, they highlight a few things. So supply chain itself was an issue for the company. If you look at the statement, they say our own factory has been running below capacity for several quarters, and supply chain become our main limiting factor. So they see this as something that will continue into the 2022. So that was a forward statement that made for the company, which actually was, I think, the main thing that certain analysts were cited, or the market participants were looking at, and that caused the price to tank after that. I think this statement was the main thing. So if you look at the thing is that in the second statement, he actually highlighted the positive part where the two factories, one in Texas and the other one in Berlin, will be coming on stream. And they highlight that they hope to achieve, or they aim to achieve 50% annual growth in vehicle delivery over the next multi-year horizon. So I take it as in this case, once the factory come on stream, and based on their other statements that highlighted that the demand is stronger than what they can supply. Technically, it will mean that whatever they can bring on stream, they should be able to sell, and the sales or P&L will continue to improve down the road. So this is something to watch. And in the latest statement, you will see that they make a certain decision to delay the Cybertruck production due to supply chain constraint. And also, by doing this, it's actually what companies like Apple is doing as well, from what I see the Apple's announcement. So what Apple highlight a little bit similar to them, they highlighted that because of the supply chain issue, right, they then try to optimize the production, meaning that if you have a few parts that can make a full product versus you still have missing parts for another product, then they will divert all the resources into one that can complete the product so that they can convert to sales. So this is something that I think Tesla is doing, which actually ties in together with what the statement made by Apple as well. So that's something that because of that, they decided to, I'm not too sure whether Cybertruck itself also have issue, but based on what they have highlighted, they decided to channel all resources into their Model X and Y production rather than reduce their resources. And in so doing, they are able to, from what I see in 2022, they are able to continue their sales momentum through for the year. So the other thing that I think he highlighted was a humanoid robot that is developing. So not too sure what this how advanced it is, but it's something to watch. So in this announcement, he did give a prelude of what will happen in 2022, and that's something that I think from a fundamental analysis angle, in the next quarter when he release result, these are things that we should be tracking to see things have improved or deteriorated from this statement. So I think from whether from value or growth investing point of view, these are things that that we should look out for in every quarterly report, and that gives us the feel of how things are, whether he's giving empty promise or fulfilling promises that he made along the way.
Yep. Thank you so much for the sharing. I think that's a very good summary of the financials. Again, if you have any questions, just unmute and ask. But I just want to give some comment with regards some of the pointers here. For example, like the delays of the Cybertruck. I think this is also quite funny, right? Because before the earnings call, actually Elon tweeted that okay, he will show up in the earnings call just to give a update on the product roadmap, right? But then in the end, the product roadmap is that okay, there's actually nothing new. Like they say, for this year there won't be any new models. Maybe next year there will be, and then they just have to focus all their attentions to like on the product supply chain constraint. Make sure this is all done correctly. So we won't see Cybertruck this year. I think that's quite interesting. And then I think Elon also spent quite a fair bit of time talking about the FSD. So I think this is, I guess, moving forward, we will also focus a lot more on autonomous driving discussions. I think this is definitely interesting area.
Yeah, this is the part that I'm not too sure. For FSD, right, if we look at the financials itself, right, as in the slide one, where do we find this in the revenue or sales or which part of the numbers is this appearing? Or is just a value add to the automotive sales to drive it?
Yeah, because they don't provide, like, they don't have a segment for the software parts, right? So I believe it is all included in the automotive sales. Actually, bring up this point, right? I just want to share. I think we have seen that their profit margin has been increasing quite steadily, right? From, like, let's say 20% to now 27% for gross profit, right? Actually, one question raised was that, okay, how does Tesla attribute, like, the improvement in the profit margin? Where does it come from, right? So there are quite a number of factors. For example, like, they set up factories in Shanghai, in different places, right? So they also can reduce the cost of shipping and so on. These are all in. But actually, one thing that I think drive most of the increase, right, is actually they are raising their price. So if I can't quote exactly how much and when does it happen, but just based on my memory, I remember is that they hiked the FSD price for a few times, and also their car prices has been increasing, I think, in the past 1 year or so. So I think that definitely helps with the improvement. I don't expect this profit margin to increase in the same magnitude as what we have seen here, like 20% become 27. I don't think next year we will hit like 38%, something like that, right? So that's not going to happen. It should trending up, but we won't see that much unless they can keep on just raising their car prices, which is a bit, I don't know, we won't say impossible, it's just that maybe not so realistic to assume that because they already increased the prices. But Kelvin is here, right? Yeah.
Yeah. Sorry. I was late. I was having dinner. Yeah. Regarding the margins, right? I think the impact on the positive impact on raising the prices is actually offset also by the cost of materials in a certain extent, as said by I think in the report and also on the earnings call. Because also they were affected by expediting some of the supplies. So they actually pay more to get some of their supplies early. So that's also being offset. To what extent, I'm also not sure. And also regarding the FSD part, I think it is recorded into the automotive sales. However, it is not fully recognized due to some features not available yet. So there's a certain, I think you are not also not sure how much was it deferred in terms of the revenue. So there's, we can assume maybe like 50% is still being deferred. So there's still an, I think it's in the accounts payable, I think, or something. I'm not sure. I'm not a accounting guy. So Punti maybe can help there. So it's being deferred as well. So to what extent, I'm not sure, but I'm quite confident looking at the way that they manufacture their products and also the efficiency of how they run their factories and also being in the industry, right? I think the efficiency of them producing the car and also the margin that they can get from per vehicle is industry leading, if not the top also, at least it's leading the industry. It's very good. It's very good.
Question for Kelvin. You not sure if you watched the full earnings call and go through the details, but just want to ask you, like, is there any highlights that you want to share with us? What was your impression from this earnings result?
Okay, yeah, definitely. Yeah, because I missed the front part, so I didn't know, but I'll share a bit of what I had. Wait, let me look through my notes because I copied this down just now. So I think one of the things that I went before the earnings call, I was concerned with the battery supply. I think I've shared in the group also. I think one of the limiting factor for Tesla to grow will be the battery supply. However, during the call, they seem to be very confident that they actually secured their battery supply for the year and moving forward. So that was very surprised for me. That's why I was very positive to hear that, at least from my side lah. However, they said that the limiting factor that will affect their growth or the risk in growing this year or short term is that because of the supply chain, the semiconductors, and not because of battery. However, so I think this is actually a very huge advantage towards Tesla, because other manufacturers are all crying for battery supply. Because I've also gotten insider news from my friends in BMW and Volkswagen that battery supply will be limiting a lot in the coming years. So Tesla saying that their battery supply is secure for the growth this year, that's very positive in my opinion. Okay, so if they can capture their, they can solve the supply chain, or maybe they ease a bit, or maybe they can pay more to get the priority, then I don't think the growth this year will be any in any form of risk. There will be very low risk that they will not hit the targets. I think they will comfortably exceed the 50%. They have also reiterated it on the call, and I'm very confident. Okay, I believe that. So that's my opinion. I think that's one of the greatest highlights. So the financial part has been, I think I'm pretty sure Maximus has already shared. Another thing that I would also like to maybe say a bit is because it's about the Austin factory going to start with 4680. I think that will really be a big change and a positive one for Tesla. It will disrupt the EV space, because currently everyone is doing battery packs, right? So you are adding an extra part to the vehicle where you are carrying an extra weight. Okay, it's like a shielding on it, and it does not provide any structural integrity to the car. But if you are talking as if using your battery as a structural part, it will have efficiency in weight. It will also give you, it uses the volume more efficiently. Okay, so from the manufacturing side, I think that is maybe a bit understated, or maybe some people don't see that. But being from the industry, I can really appreciate that. Because I can also draw parallel from the Model S Plaid that Monroe Life has tore down. So if you are an engineer, you would appreciate the fact that they use the cross-car beam. They use that cross-car beam to fit their air suspension tank. So if you are in the industry, right, you will know that the cross-car beam is actually from the mechanical department, and then the air suspension tank, the air for the suspension, right, the tank is actually in another department. But they are able to engineer this and integrate it to the same part. So that is actually ingenious. That is really something that not many people or not many car manufacturers are able to do. So I believe that the structural battery pack will really change the way people manufacture cars. Okay, so that's from the qualitative part. I think the financial I need to go through. I think is everything already talked about. So those are the two main highlights that I think I'm very confident on Tesla executing. So the first thing is the battery supply is secure, and the second thing is the way they manufacture cars is really totally different. The way they design, develop, and manufacture the cars.
Thanks, Kelvin, for the sharing. Actually, speaking of growth, right, I also recall there's one thing that they mentioned. Okay, first, their guidance, right, they don't provide like Q1 guidance. They're really like silent on this because this is they don't do that anymore. But they do guide in terms of like annual growth rate, right? So their numbers is like, okay, they say 50%. That's the target that they say will do. Like Kelvin said, they anyway plan to exceed that also. But that 50%, right? The interesting part is that actually this 50% doesn't need factory from Berlin and also from Austin. I think one point that I pick up is that just based on Shanghai and Fremont, right, the one that's running right now, there is sufficient to like generate this 50% growth. So I think even if there's any problem, it will be because of the supply chain and not because of, let's say, delay in Austin or in Berlin. So that's something that I found quite interesting, because I always thought that given that they already have, let's say, produced 900K cars, right? So in order to produce, let's say, 1.4 million cars, they might need to utilize the new factory in order to make that numbers. So apparently not. So that's, I think, I found it quite interesting. And then speaking of that, right, I just wanted to ask, like, is it now Austin will start running first, or is it like Berlin will start running first? And what was the situation with Berlin? Because I have heard nothing on Berlin situation and the water approval stuff. Is there any story or update to share?
Okay, I say something what I know lah. Also, actually, it's all public lah. But anyway, I do agree that they say that just with Fremont and Shanghai, they can comfortably exceed 50% growth, and this is coming from the CFO, from Zachary Kirkhorn. Not from Elon. Elon, maybe, sometimes you say he may be not very accurate, but this is coming from the CFO. So the CFO is actually a very conservative person. So if he can say that, I think Tesla can comfortably exceed that 50%. So about 1.4, 1.5 million, I think I'm fairly confident they will achieve it. And then coming to the factory part, from the information that we have publicly, my understanding is that Austin is right on track. The 4680 from the Cato Road is on track. So they will have, I think, yearly about 10 gigawatt hours of battery supply there for the 4680. And that would be sufficient for 150,000 cars or something like that, depending on the battery pack. So roughly 150,000. And then they also, I don't think there's any like approval risk for the Austin factory. There's only on the internal risk. So if Tesla is able to reach volumes, get the employees training and everything. For Berlin part, it's still an open question. The current situation is that they will be waiting for the hearing on February 11. This is not between Tesla. This is between the water board or the water supplier and the environmental groups. So the environmental groups is suing. Actually, not really suing. They are complaining, right, to the courts that the water supply is not legal because if I'm not mistaken, the documentation was there's a technical problem. There's a technical problem.
Okay.
There's a technical problem between the state and the water supplier. So it's quite a bullshit problem, but anyway, legal is legal, right? So the politicians have said that this is not an issue of approval of the factory, but the factory needs water supply to run. So even if the factory is approved, but there's no water supply, it will also be an issue. I'm not sure if they are able to run like half capacity or maybe just very small capacity. That one I'm not sure. But certainly there's a risk there. If it's getting delayed, so then there will be a very big issue there. So far that's what I got. However, if you are talking about, let's say, are they able to build cars? That one already proven that they are already building, I think, about 2,000 cars. They have been shipped to a few regions, a few markets in the north, in the Norway for like winter testing, crash testing and everything. for verification and so on. So they are able to build the cars. It's just that they are not able to sell it yet. That's all I have.
Thank you so much. I didn't follow this one so details. I guess most of the information that you have read are all in German language, right?
Yeah, more or less, but most of it has been translated, but I usually go back to the source to see what is really happening with this kind of problem. But it's a lot all bureaucracy. I don't see a problem of Tesla internally having any execution risk. I think they have already secured most of their supply. I'm pretty sure if they get the approvals and get the water done, they can get up and running fairly fast. Germany is centrally located, so they have very good rail access. It's also very near the Hamburg port, so I'm pretty sure the supplies can come quite easily. So it's just up to when can they start building.
Yeah. So I think actually, not sure about 2022. It seems that, let's say all these factories are running, right? 2023 will be the more exciting years, right? Because even if they can start producing, they will take some time to ramp the productions, right? The volume production, all this will take time. Like Shanghai, they don't from the day one already churn up this kind of volume, right? It's just keep on, as time goes on, they keep on ramping up, right? So I guess for Austin and also for Berlin, probably 2023 will be something that's quite huge production.
Yeah, definitely. For 2022, I don't think there will be like very big numbers. So if we look back at what Shanghai has done, so Shanghai, the first year 2020, I think they delivered 100K, something like that, which is actually not a small number as well. But of course, Chinese efficiency, that's a totally different ball game, right? They have all the suppliers there very nearby. So for Austin, I'm not sure about the supply chain, but I'm pretty sure they can. I think if it's up and running by March, I think they could get about 50K for the year. But you see, like battery supply is done, right? So 50 to 100K, I think can be done. For Germany, that's another big question. But if looking at also like Shanghai, right? If Germany can get up and running soon, I think they also can comfortably get like 50K for the first year. Shanghai second year did 380,000, I think 380,000 or 400,000, something like that. 2021, so they can really ramp fast if they want. So let's see lah. But 2023 will be also very exciting. And also from the call, Elon said that they will announce a new location end of the year, right? So if everything goes well, there'll be a new location. So then that location would likely start like 2024, end 2024, if following the historical timeline lah. So let's look forward to that.
Yep. Look forward to that. Okay. Any other questions? I'll always give priority to those who join here.
Yeah, I have a question. Does anyone have a rough number of the number of EVs that will be sold by, say, 2030? Like, because I'm trying to do a rough estimate of how many EVs will be sold in the far future, like 2030, okay, assuming that all auto manufacturers are only producing EVs by 2030. And, I'm trying to estimate what Tesla's market share would be. Yeah, and then from there, I'm just trying to, get a rough estimate of the EPS. Yeah, so, I know roughly what price, so I can determine a price that I would feel comfortable to go in it. Yeah, but of course, by then, who knows, Tesla's earnings could come from so many other sources. Yeah, but being conservative, I just want to know roughly how many, the size of the EV market and Tesla's market share by 2030.
Yes, I have that. I have done a short search, but the info is a bit outdated. I think it's from 2020. So I found from Deloitte and KPMG, if I'm not mistaken, but I think the Deloitte one was better. So anyway, they were projecting 30 million. Wait, let me check back. Let me check back. I have the answer. Wait. I think I shared before. But this is just from one source lah. You can also, go for different sources. So one source I found is from Deloitte. It says, okay, so in 2020, the global vehicle market was around 70 million. And 2020, there was 3 million EVs. Then Deloitte is expecting a CAGR of 29% per annum for EVs. So that means 2030, EVs will take around a 32% market share, which is about 30 million vehicles. So you can start from there lah.
Okay, 30 million.
EVs.
Do you think 10% market share for Tesla is too conservative?
My prediction, right? Actually, I think Deloitte is very conservative with just 30% EVs from the whole world. I'm actually expecting about 60 to 65% of EVs from the whole market in 2030. And for my conservative estimate, I'm actually estimating Tesla to maintain its market share currently about 17 to 18% without growing market share. So that means Tesla will get about 11 to 12 million in 2030. That's my estimate. But of course, Elon Musk and the rest, they are saying they might go up to 20 million. But they say lah. Maybe they know it better. I don't know. But I try to be conservative. I take about 11 million. So that one up to you lor.
Okay. Thank you very much. Thanks.
Okay, thanks.
I just want to add a point on this discussion because I do like how A approached the valuations. I think this approach, right, rather than we looking at what's the financial statement right now, right? Basically, we want to invest for the future. Like how you did it is that you look at the market share, you say, okay, let's say we put 10 millions, right? And then we just estimate one car, how much profit they can get. Let's say we put 10,000, right? So 10,000 multiplied by 10 millions, that's a number. And then you just, from that profit, you multiply by PE multiple, you just try to estimate how much is the market cap now. I think that approach, right, is very simple, but it really make much sense as compared to, let's say, by just looking at today's PE and then just say it is overvalued, right? But we also need to bear in mind that all these assumptions, right? Let's say it doesn't hit 11 million, like what Kelvin just said. Let's say it hit 5 million only, then of course, it will be a very big difference, meaning that we will overvalue the companies. That's point number one. And point number two is that I think we're talking about 2030, right? So it's like 8 years from today. I think a lot of things within these 8 years will determine the ultimate outcome. And for this, specifically for this discussion, I would say the price of the EV, right, will be number one factors. For example, like if they stay at current price, right, there's no way that EV market share will become so high. The price has to come down. But how much it can come down, I think ARK Invest, they have done some analysis and they are very confident that EV price will come down, and then let's say their price will be lower than standard Toyota Camry, and hence the market share will pick up, right? But how much is it? How fast it will come down? I think this is still, there's some question mark there. So that's the uncertainty part now. Yeah, just want to chip in a bit.
Yes, there's definitely uncertainty. So that's why we have to, put some like rough estimates, based from our experience, based on the trends. And also this projection by Deloitte is including commercial vehicles. So we have to also look into that lah. So maybe if we just say like 11 million passenger vehicles, but what's the breakdown? So I agree with what Punti said as well. Price-wise, I mean, even like luxury vehicle market, how much, premium, how much, and then like pickup trucks, buses, all is included in the 70 to 100 million. I think they estimate 2030 to have like 100 million vehicle market, which also we don't know, right? So maybe in the future, people don't buy cars anymore, right? So the market will definitely shrink. So of course, there's a lot of risk that we have to assume lah. So just be cautious, but also optimistic lah.
Right. Okay. Let's go through some of the questions here. I'll just pick those related to Tesla, and if you have any comment, just give your comments. Okay. I'll start with this second one first. Is there any fundamental news in the latest Tesla earnings to feel positive about? So I don't know, Maximus or Kelvin or anyone else. Not sure if you guys follow closely. You want to comment on this?
So I just want to repeat what I think it was positive from the earnings call. So financial wise, to me, it's very positive. We can see that the growth is happening, right? They are already proven that they are actually making money. Some people may not believe it, but I can't convince everyone. But numbers are numbers. So if you believe in the numbers, you believe in the management that they will not be a fraud or something. So just looking at the numbers, I mean, it is very positive. Second part is the thing that I take away was what I said just now, the battery supply, that they can say that they have secured the supply. So that was very positive for me, because my previous doubt, I think I've shared in the group also, was talking about the battery supply. The material prices are coming up, the raw materials prices are going up. People all the manufacturers are scrambling to sign contracts, and I got news from people, from my friends in the industry, that they are having a tough time getting supply, because the Chinese EVs are eating up a lot of supply. So if Tesla is able to secure at least for their growth of 1.4, 1.5 million for the coming year, that is already very, very positive.
Hi, yeah. I've been looking at the fourth quarter Tesla, although I'm not invested, but I think there are some surprises, which is quite positive. So from what I read, you all can correct me if I'm wrong. So if I'm not wrong, the past 2 years, they have been trying to cut the prices of the car, if I'm not wrong. But instead of their average gross profit margin decreasing, it actually went up, right, to about 30%, right, for their vehicle sales, which is much higher than Toyota. Toyota is only 19%. Ferrari is about 20%. So I don't know how they achieve that. It could be their robotics production or something. And one more surprise that I saw is they are no more deemed a carbon seller, because in this fourth quarter, total revenue about 17.7 billion, right? 15.34 billion is sales of vehicles. The remaining is the carbon points, which is very, very minimal now. And then the last surprise that I saw is the average inventory cycle for Tesla now has been dropping consistently. Now it's only 4 days, So it takes an average of only 4 days for a car to be delivered globally. So I don't know whether anyone can share, but this is quite surprising. And any other things that I've seen. Other than that, yeah, that's my input.
Do you think the 50% assumption is in 2023 and 2024 is still valid? Because I feel that the announcement of the factory is a little too late to prevent the 50%.
I couldn't get you much, but let me try to repeat what you I think you were asking. Is 2023 and 2024 still can grow 50%? Is that right?
Yes, correct. Because I do feel like the factory announcement might be a little bit delayed.
Yeah, I think it is still valid, because you see that from the from what the management said, that with just these current two factories, they are able to grow another 50%. So if you look in the drone videos and stuff, right, you can see actually the Shanghai is also still being built, still growing. And then the Austin location, the Giga Texas location, you see the huge part, right? It's actually they are building for in the future. So the first part is already the first phase, and it's only using like a quarter of it. And then if you look in the Giga Berlin location as well, the first building that you see, right, is also only a quarter of the land that they bought, And then they are also building a battery factory there. So if you can imagine, like, if they were to, 4x the current floor space, if you just think very linearly, right, they are able to like 4x the production. So one factory to do like 1 to 1.5 million may be their goal, So I think the growth is still intact, as long as the supply is secure, especially semiconductors and so on. That's my opinion from seeing the floor plan and seeing their the land that they have bought and so on.
Just now, Hayden talked about the price, right? So I also want to share this point that I picked up during the call. They say that the 25,000 cars, they are not working on it, at least for now, because they want to focus all their attentions to sorting out the supply chain problem and just focus on the car that they are selling now, right, which is Model Y and Model 3. So I think that's something quite interesting, because let's say 2 years back, right, I was always have this impression that they are not going to make money because they are focusing a lot on the sales, right? So if you want to grab more market share, you just need to keep the car price at a much lower level to compete. So at least that's my impression. But it seems that now they have this ability to keep on raising price, and so far there's no problem to say, okay, there's no demand, right? So they don't have this issue. Definitely a good thing. And the other things, I'll come back to this question, the fundamental news, right? I think this round, Elon spent quite a fair bit of time to talk about the FSD, which we haven't talked about it until now, right? So I think that's quite interesting, because he said that, okay, again, he shared many times that he foresee that FSD will be here, let's say by end of the year or coming soon, right? Still haven't come yet, but he iterated again, I think from quite a few times during this call, that he's very confident that FSD will be here, and then it will be at least better than human. I think that's not a very high bar to meet, because human is very careless in driving, but the one that we say they need to hit the 0.99999, that one is much harder. But I think he's quite confident in terms of like, okay, having this FSD that is working much better than the current version, right? So people won't question so much in terms of the value of the car. So they don't really need to lower the car to make the car more sellable, right? So I think that's definitely something that is quite interesting now. Yeah. Any thought on FSD or any comments that you guys have related to FSD? I think that's something quite interesting.
Actually, to be honest, right, I'm not actually very bullish on FSD. But that being said, right, if it really happens, I think it is true what Elon has said, it will be truly he said what he said is like revolutionary, because you can save a lot of lives, then the asset value of a car, go up a lot more than the 12K that he's asking for it now, which I believe is true. I mean, if you have a vehicle that, is safe, and, the value of life saved is really a lot, right? However, when he said, it will be solved this year, I'm really hoping it's true, but I'm putting a very skeptical mind to it, okay? Because from what I've seen, there is still quite a bit of things to do to at least, to make people confident of it really proven to be safe. Because what I've read is that when a human makes an error, right, we are actually more forgiving than actually when a machine makes an error. So there is still a lot of work to do to give that confidence to the masses. So I think let's see. I mean, we have seen in China, other players has also been, putting out their robotaxi. So being able to do it is already there. It's just that how to build that confidence, especially for a vehicle that you own personally. So it's a bit different, right? If a robotaxi, if you sit inside, it's being run by someone else, right? If something happens, you got someone to blame, right? Like Waymo, you can blame that. But if you yourself own it, right, and then you are ferrying your own family, right, to a certain extent, you are a bit skeptical. You expect more from the machine. So I think the potential is definitely there. I also believe that Tesla will be able to solve this problem. It's just that, will it happen this year? I'm a bit skeptical.
Actually, what do you mean by solve? Like, what's the definition of solve the FSD problem?
It means that it's able to drive by itself in every situation imaginable, and also provide the safety margin that is required from the regulation standpoint. So the regulation standpoint is also another issue. How are you going to say that, okay, up to this point we accept certain fatalities in case it happens? So that is also what they mean by solving it, also the regulation part. So from the technical part is the Elon Musk is saying, like, can they recognize all situations? Like, let's say a dinosaur suddenly comes out in front of you, right? Which is like the chance of it happening is like it's almost zero, right? But suddenly, let's say a UFO drops in front of you, or SpaceX land in front of the car, right? What is the car going to do? Okay, like things like that, lah. They deem it as solvable, as being solved. But if you say like there's a metric for it to say, okay, up to this point it's solved, I think it's still an open question.
So the problem space is infinite, right? If you say solve for every situation, realistically speaking, every situation is really every situation. And that means, like what you say, a UFO drop down is considered one of the situations, even though you don't even have the UFO data to train on. That's kind of understanding, right?
Yes, that's the problem. Yeah, the domain is not defined yet. Because the regulators are not doing the definition of that domain. What kind of problems has to be solved because of the blame problem?
The main issue is that if you want to compare with like FSD, whatever, is all considered as autopilot kind of things, right? So if you compare with, like, say, aircraft has autopilot for past 30-40 years already, and the criteria for aircraft autopilot is such that any decision done by the autopilot is actually viewable. That means, like, they can actually go down into the code to actually see what is the path that was executed, what was the parameters that were executed, right, that lead to the autopilot doing a certain decision. Like, they can see specifically, say, oh, the aircraft detected that the air pressure was so and so, and detected that the altitude was so and so. Then it was because the sensor had an issue, so it detected wrongly. So the entire main issue of why your aircraft crashed or got into an accident is because there was a sensor defect or something like that. So if you see the line of the chain of reasoning in this kind of autopilot cases, is that they will drill right down to the problem, and then once they determine what is the exact problem, right, then they can put a value to it, because they can say that, oh, it's because so and so manufacturer used a faulty sensor that was not compliant with certain standards, and that resulted in this accident, so that company is going to get the bill or get sued or whatever, things like that. So based on this kind of precedent case, this is the level that must be done for full self-driving. And the issue with I'm not sure about, I mean, I don't know about what's exactly inside going for Tesla full self-driving, but if I'm not wrong, right, they are just basing on camera footage and training on the camera footage itself to keep training and adjusting it, like just dumping pure computing power on it with like ML algorithms on it to actually get out the results. But the key thing for regulation is not about like say whether you are like say 99.99% safe. The key thing about regulation is that the percentage actually really does not matter as much as being able to explain when an accident or incident happened. That's more important from a regulation standpoint. Like you can have like a 99% or 99.999%, right? But in the event of that 0.0001% it happens, there must be full transparency into what are the parameters that led to that incident happening. And that is what regulators typically look for. So I'm not sure Tesla has done until what level to fulfill this kind of compliance, but that's what I know in terms of compliance in this area.
Yeah, that is also the issue. I think it's very vague to people or to us or most of us that are not in this in the industry, because even to me it's not clear, right? Like, what about liability? So is there like a group or a consortium or a regulatory group that's saying that you have to define a certain domain to say that you can get a certain full level 5? There is actually already in the SAE level of autonomy, but then the documentation is not talking about liability yet. So the documentation is just talking about there's the driver intervention. So I think level 0 to level 2 is that the driver still is in total control, and then level 3 to 5 is 3 and 4 is I think the vehicle needs to warn if you need to take over, and then only level 5 that you do not need to take any action as a driver. So I think Tesla is going for that if they say they want to solve it, right? But I'm not sure. I have not gone into the documentation to say like how are they going to regulate, or what will define that kind of level 5. Like we were also discussing on the chat group, like Tesla is actually just level 2, right? So what I would argue is that the levels of autonomy is not based on its capability. It's actually based on what domain, what design domain you have, and then the level of intervention needed. So who's going to take control? That's the first part. And the second part is the capability. I think Tesla's capability is already, they define themselves that they want to be able to drive on every condition. But the extent that the liability moves to the manufacturer, I think they are not there yet. So that is why they are considered, just a level 2. Whereas in, like you say, like the Honda, or I think Volvo, I think they were saying that they are already level 3, and that's because the way that they design the domain is that they can well define which area that they are capable of, and then if it's outside this area, they don't take any responsibility. It goes back to the driver, so they can put themselves like level 3, level 4. I think something like this. So I think for me, I'm not so sure also what will the way be moving forward. But I think the Tesla's goal is to ensure that the machine is able to maneuver in all situations, I think. So I think that what you said, there's like infinite, there's infinite possibilities, which I hope Tesla is not to that level. I mean, otherwise you will never solve it, right? So I don't know. I mean, let's see, and I want to also listen to anybody who has experience or any opinions.
Yixman is here. You want to give any comment? You also have some view on this, right?
Yeah, but I don't know how to summarize the views, man. Maybe I'll start off with explaining the levels. So I mean there's a demarcation level 2 to level 3. That's a big demarcation. This is where the responsibility of control transfers from, or rather I would say, who's the primary controller of the vehicle. Why? So I always thought that Tesla was already at level 3, but I was just had a conversation, then people telling me, no, technically it's level 2. Did some research. Okay, so the market actually has many level 4s now. So all this level 4 is defined as handle situations within a geofence and within a speed limit. So there are certain scopes that the vendor of this particular system is able to say that, okay, this system works within a particular area, and there must not be anything that is above a certain speed, because let's say you cannot handle a situation where a missile hurtles to you at Mach 8. There's no way that you can avoid that particular situation because the sensors cannot react in time. So that's why there's also speed limits in this situation. So usually there are 4 sensors that we are talking about. One is ultrasonic. Every vehicle is ultrasonic, even Tesla. So when Elon Musk said that we only use camera, he means we only use camera plus ultrasonic. Ultrasonic is the one that has very low range. It's used when you want to park your car and there's a beeping sound and stuff like that. All vehicles have ultrasonic now, as far as I know. I'm not sure about vehicles made in countries where they're not well regulated, but most vehicles have this ultrasonic. Then you have your radar. Radar is using radio waves instead of sound waves. Also, most cars that use, that have this particular capability of autonomous would use a combination of radar and camera. But there are some cars that use LiDAR, which is laser. Longer distance, more precise, I believe. And the reason why radar and LiDAR are important is because the cameras can tell objects and give a feedback. But I mean, you've seen some videos whereby Tesla car goes into a stationary truck. And the reason they go into a stationary truck is because they don't recognize that it's a physical obstruction, because it's a very unique situation. Whereas if imagine it was a radar or LiDAR, it would be like the ultrasonic parking assist sensor. They would, even though they cannot identify that this is a truck, or if they cannot identify, they know that this is a physical obstruction, and you're not supposed to go through a physical obstruction. That is one of the problems, that if you only have a camera situation and an ultrasonic sensor, which has a range of maybe about 3 meters, you are not able to stop. I mean, you will stop in 3 meters, which is not enough to avoid that truck. If it's just camera, what you end up with is that you got to recognize every single possible object on the road, and extrapolate from there. I mean, collecting data and all that, and understanding what objects are obstructions, what objects are not, what objects are dangerous and what objects are not. Whereas if you had a radar or a LiDAR, you have a fail-safe in the event that there's actually a physical obstruction that you do not know, because it cannot go through a physical obstruction. You know it's a physical obstruction. And so my opinion is that Musk has to relent a bit and understand why he needs this particular sensor. He can't just use cameras as a basis, because there's no user acceptance test that can actually solve all the issues beforehand. I mean, you can. It's infinite. I mean, there's an infinite amount of situations. So the radar is a good idea. The LiDAR is a good idea, and and it's already, maybe he's not able. Maybe his engineers have not been able to crack how to combine this information into a holistic picture for the car to navigate, and that's why he chose to move into only cameras. But the technology is pretty mature already. People have worked on it for a decade. So there really is no reason why he cannot just go to a mature company and get a technology and integrate it into his vehicle. I don't think there's any shame in that. But that's the main reason. And also, in vehicles, because of all the rattling that goes on in vehicles, no matter how smooth it is, high heat, stuff like that. The camera. One of the problems that we solved was the camera holder has a lens, and that the camera holder itself is subject to the high heat, and the chimney itself of the holder over time deforms. So the camera itself, the IC chip cannot tell how much it has deformed by. So there will be some variance in how the measurement, the precision of the measurement will be to detect how far an object is. And that is, if you only use cameras to solve it, you don't have that fail-safe. So I'm just very concerned if he's relying just on cameras to solve the issue, because as far as I can tell, I can't think of a way in which it could work in the way that he thinks that it can work. If he has solved the issue, I guess power to him, because then he has managed to basically streamline the entire process for autonomous driving, and we can all learn from him. And he said that he will provide this information to everyone if he solves it. So then it will advance our understanding quite a bit more. But as far as I know, all those level 4s are using either a radar camera or LiDAR camera, a LiCam or a RICAM system. And the cost of the system is not expensive, holistically speaking. It's only $5,000 and this $5,000 is for the full suite. 4 cameras, 4 radars, 1 LiDAR. You can actually get 4 radars, 4 cameras for around $1,008. The LiDAR is an expensive one. It's just that if you buy the LiDAR, actually looks quite ugly. It's on the roof of the car, so you got to manufacture the car to look like that. So that the cost I mentioned to you is actually publicly available information. I think if you Google RACAM system, you will see the cost. They actually announce the cost. This is a company called Motional. Motional is very closely tied to the Singapore government. There was a company called Nutonomy, I think started in the early 2010s. Nutonomy started in MIT, moved to Singapore because of all the tax regimes, acquired by Hyundai, acquired by Hyundai. And Aptiv is, there used to be a company called Delphi, which was a spin-off from General Motors, which later branded itself as Aptiv, specifically talking about new generation sensor technology, and especially autonomous vehicles. This is a tier 1 supplier doing about 15 billion a year in revenue, just making sensors for automotive. They joint venture with Hyundai to create a company called Motional, using the IP from Nutonomy, and they basically are doing. I think they're actually the underground leaders for this autonomous system. I looked at the volumes that they are actually doing. They're doing for General Motors. They're doing for Hyundai. Combined together, they probably make more autonomous vehicles than any other. All this Waymo, Yandex, even the Chinese markets. Okay, the Chinese market is a black hole. I have no idea how many autonomous vehicles they have produced in production. But all these Las Vegas vehicles, Stockholm, even I think that there are some in China. But this Motional has been producing the systems for some time already, level 4. And the only issue is that, first, traditional automakers are very, very conservative. They will not stick out. No one is going to stick out their neck and say that I got level 4 and I'm going to give it to you. I'm going to sell it to you. Unless they are 100% certain you will not blow back on them. They have no incentive to do so because there's no one in the market with level 4 right now. So that's why it's all trial basis robotaxis, but it works. It works. I think that there are some places in Singapore you can go and actually have a look at that. I think it's like Science Park, maybe. Certain time periods, they will actually have those vehicles running around. So geofencing means within the Science Park, but I believe that the only reason it's not moving up is mapping and regulation. Proper mapping, proper regulations, up technology-wise, no issues. To level 4. The only reason level 4 and level 5 is that level 5, you see the vehicles, they have no steering wheels, they have no driver's seat. All the passengers get on board, like a meeting room, and the vehicle just drives itself. That's how I envision how level 5 will look like. So the technology is way more advanced than what we currently think. That's what I have to say.
Thanks a lot for the comment. Actually, I have one question there because just today I checked out. I think it's Baidu in China. They also have all these like autonomous driving technology, right? So I just try to look out like how many robo taxi or robo cars on the road, right? Actually, there aren't that many. So I had like a short discussion with Chiang. Also, he told me it's actually because given that current price of this robo car, right? Actually, it's not economical to run or to scale up the robo taxi business. The car itself is quite expensive. Right now, right? I think I recall the number is around, let's say, 200,000 plus USD for one car, and I think that's maybe because they only produce like a handful, right? But they plan to scale it and to build higher quantity, but it's also not like very high numbers, you know. The target is actually to bring down the cost to 75,000. So I try to reconcile this number, like 75,000 US dollar per car, much cheaper. It's like 1/3 of the cost, right? But how does this reconcile back to the numbers that you just given on the the system, the autonomous system that you mentioned? It's only like 5,000, right? So where does that another 70,000 goes to, right? So I'm also quite curious on this. There is it something wrong?
No, so you got to tell me which car in particular is costing 200,000. If it's a prototype car, specifically built to have all the charging mechanisms, the robotaxi. I mean, I do not know is it a special vehicle being built for robotaxis? The reason is because when you only have a gearing for, let's say 100 cars, it's going to cost a bomb. I mean, all the molds, all the factory itself that has to build this particular car needs to be geared towards building that car. So of course, if it's small volume, it'll be very, very high. So if it's specifically built this particular model of car, of course the cost of car will be high. Now I'm talking about RACAM system. It's a kit. Essentially, when I design, let's say, so the first RACAM system is the Volvo XC90 2015. I think Kelvin was telling me that Conti also designed a similar radar camera system for Mercedes, also 2015. Usually what happens is it will be part of the design of the car. So the car was always being built. Then in this particular case, Aptiv, which is an automaker supplier, or Conti, which is also an automaker supplier, would come in and say that I have an autonomous solution for you, and it'll be part of the design of the car project. So that particular part would have a cost. So generally speaking, a cost of a car, okay, let's say a Toyota would be roughly $15,000. Okay, $15,000 to build a car. The cost of the autonomous system, which Aptiv would charge, would add $5,000 to the cost. If it was a full suite, they have a 1008 solution, which is basically four radars and 4 cameras without the LiDAR. which is sufficient for probably a level 3. So the XC90 was built with a level 3 in mind. Safety was actually built to monitor if suppose the passenger was unconscious, either sleep deprived, heart attack, that sort of thing. The safety function will kick in, and basically you will drive the car to a safe spot. So that was the notion. They didn't want to make it autonomous from the get-go. They didn't want to advertise autonomous vehicle capability because they don't want to have the liability of the autonomous vehicle and someone just doing it that way. It's a safety service. This was 2015, level 3. And it just added to the cost of the design, not building a new car. So unless you give me the data, what you're talking about, I cannot answer why it cost 200,000. But if it was a completely new car and someone had designed and the run is only 100 or 1,000 cars, yeah, of course it will cost a bomb. That's why I said.
Yeah, I'll share the article later, then we can take a detailed look. I also don't remember. I think the 200,000 plus, that one is definitely very small numbers, but I'm more focusing on the 75,000. Why that one is considered scaling up, not to the millions, right? I believe it's like few thousand. Why does it still like need 75,000 for a car, right? So that's one of my questions. Yeah,
Yixman, who owns the software stack for that RECAM system?
I believe it will be Active. You know Active, right?
Yeah, I've heard of it before. When I was in Conti, it was also the same. The manufacturers are not willing to own that stack, so they are actually pushing everything to the vendors. But in terms of vendor side, right, we are the challenge that I had last time when I was speaking to my colleagues is that they do not allow the suppliers to touch their ECUs and also the control system. So there is a very big challenge of communication between the different systems. So I'm not sure if it's solved now, but at that time, like for example, like when we were doing our cameras, right, they are for like traffic sign recognition, the only signal that we can give, right, is that the recognition must be inside the camera itself. Okay, so that it adds a lot of cost, and then it's not efficient. So yep. I don't know what is it now, but because Tesla is not offloading that computation to the sensors, they are actually doing it themselves. So do you see an advantage in Tesla, like, integrating and owning the whole stack instead of, putting it off to the vendors?
Of course, Conti would have that issue, but of course, the close relationship Conti would have with the continental manufacturers would allow them over time, because at the end of the day, it is only a question of whether or not there is enough, executive leadership to allow Conti to actually access the information, access the ECU. In particular for Active's case. So what happened was that Delphi Technologies broke up in 2017 to have a unit called Aptiv. Now Aptiv later worked together with Hyundai. This is where the big one comes in, which is Hyundai's joint venture with Aptiv as an entity to build a company called Motional. And specifically 50% owned by Hyundai, 50% owned by Aptiv. This sort of structures would give a bit more trust for Hyundai to allow access to their car itself. So I think it's just over time. I mean, the technology is there. It's just that the Tesla, of course, owns the entire stack, so they would already have access to it. Whereas the others may not want to grant access because all these suppliers would work with other companies. But in this particular case, with a complete new structure whereby a joint venture company is created, there would be some impetus for Hyundai to allow access to the ECU for this particular Motional company, which is a joint venture. So I believe that we'll see such new companies coming on board privately owned between the two larger companies that will be able to make it to level 4 in an easier fashion. I mean, these are all just corporate roadblocks rather than actually technological roadblocks.
Okay, yeah, thank you.
Thanks a lot. I think the one more comment that I want to make is related to, just now we talked about what are the, I slipped my mind already. It's okay. I think let it go. Later, I thought if I remember, I'll comment. I think let's spend some time. We're already at 10:30. Just quickly go through. We don't have that many questions. We just quickly go through some of the questions here. Let's say if you have any comment, please go ahead to comment. Yeah, let's go one by one. The first one: anyone can share their loss experience from using leverage or selling a lot of puts. How did you manage it? I'm not sure if these questions come from Nick. Yeah, just my own speculation. I don't know actually. Anyone has any experience on this? I also don't have this experience, so I can't comment. So I'll give you a pass unless anyone want to comment. If not, I'll just pass. Yeah. Next one, thoughts on investing in Fintech, PayPal, Square, Affirm, Upstart, etc. for the long term. I think, Kelvin, you have take a look, right? But I think we discussed briefly on Square like just this week, right? But I don't have much to comment.
I also don't have much to comment. I mean, I invest in the Shift4, but very small position. And why I invest in Shift4 is only because they have the integration from top to bottom. So they provide payroll, they provide inventory. So they are not just like a payment processor. So they provide the solutions and they can also integrate with the other legacy solutions. So that was just my small, for fun, itchy hand kind of portfolio. But if you are asking about this Square and all this, I don't really have much comment because I'm not really bullish in the fintech space also.
Yeah, one thing I saw is that competition is quite intense in this area, and we still don't know what will come up from all the DeFi space, right? Maybe there are something coming out also. It could be a disruptor. I don't know. That's something to watch out also. But for Square, actually I sold 10 shares and there's another 5 shares that I'm still sitting in my portfolio. Not worry about that. So small position. Others, let's say if I know anyone who are bullish on these stocks, then we can discuss in more details. Are you excited for Optimus and the possibility that Tesla will achieve this? This is, I think, quite interesting. Anyone else? Because I think this one, I think none of us has any visibility, right? So I think it's more like just guessing. Anyone have any opinions on this?
Yeah, if you're talking about, being excited for a humanoid robot, well, definitely, right? It's like you are watching a science fiction movie and imagine the possibilities, right? Like a humanoid robot, how many things that it can be done, because a lot of tools, a lot of things that we have now is all made for humans ergonomically, right? So if you can create a robot to take over labor, then it will be really amazing. But of course, in the other side, you already have specialty robots, right? We have robots that can do a job very well. So like we have a vacuum robot, we have a welding robot, and all those things we already have. But to do a humanoid robot, one thing is, if you're talking like the possibility, right? I don't know, because it's like very science fiction. Maybe Elon thinks in a different time horizon, right? So he knows it better. So he thinks that if it's possible, the way he thinks is like, if it doesn't violate the law of physics, right, it should be possible. So that's the way he thinks. So maybe if we can just put it as like a bonus, maybe, I think. But to me, I don't put too much wait on this because for me personally I invested in Tesla without knowing that there's going to be a Tesla bot, right? So am I still I'm still bullish for Tesla. But if he can really pull this off, then amazing. I think the humanoid robot is really totally out of this world.
I'm unfamiliar with this. What sort of timeline are you looking at for, or his projected timeline?
For this humanoid robot, I don't know, but he actually said they might come up with something this year.
But I feel it's more important to solve the problem of general AI than to create a humanoid robot, because a humanoid robot without general AI is not going to be very useful, right?
Yeah, that's right. But I think he wants to show without the general AI. I think so. He wants to solve. I mean, at least for this year, he wants to show that the motors, the actuators, and everything is possible on a humanoid form, and to do repetitive tasks, program repetitive tasks, and then maybe with some visual recognition. I think that's his timeline. But if you are talking about like general AI to be a companion to you and then to like give instruction and then they will learn and so on, I don't think that will happen anytime soon.
Okay.
Yeah, I think the next question is also related. What do you think of Elon prioritizing Optimus and FSD over launching other Tesla models in the recent earnings call? By the way, this Optimus, right? The name, which is quite funny, Optimus subprime, right? Even Elon joked about it during the earnings call. The name. So, what do you think? Do you think this is the right thing to do?
I think Elon prioritizing this, I think it's only in his mind. That means, you see, because the manufacturing of cars, I think, is boring him already, because that is more or less in the like autopilot phase. So he has already like sort of delegated that problem to his employees. So it's like he already give it to like a COO role already. So he doesn't want to do that anymore. So I think in his mind, when he says prioritizing Optimus and FSD, is that he's going to put more of his time into these two things, rather than wasting time on day-to-day stuff like should you put a screw, or should you increase your production in Model S or Model Y. I think that's what he meant. I might be wrong, but I think that's what he meant. Knowing how he's not the best communicator, right? But I think that's what he meant. But I don't think the whole company will say, okay, let's don't prioritize our ramping up of vehicles and let's all do Optimus. I don't think that's the case. It's just that I think he's going to put more of his time into the next product rather than the current product.
Also, there's no point to really keep launching new when we say launching, we means announce a new model, right? I don't know. For example, like Roadster, all these are already announced, but I don't know. Does it? Of course, not launch. So launching, what does it mean, right?
Yeah, I think what I think a lot of the analysts or a lot of people who listening to the call was quite disappointed when he said he wanted to talk about the product roadmap. I think for us, we were thinking, or the analysts were thinking, like, when is Cybertruck coming? When is Roadster coming? When is Semi going to ramp and all those things? So I think that's one of the reason why the stock got so off. But if I'm not wrong, right, is that Elon is prioritizing. It means he's going to put more of his time. He's going to spend more time on making sure the new products, like this kind of like totally long shots, right, moon shots, rather than, like if you're talking like a Roadster, right, the Plaid is already here. There's already a Model S Plaid, right? So if they want to build a Roadster, it's more or less, like an iteration of the Model S Plaid. And then, like, say Cybertruck, the Cybertruck there's already a production candidate, right? So I think that's what he meant, So he's thinking in a different time horizon than what we usually think. So, but I'm not putting too. I mean, short term, I don't think the humanoid robot will come into fruition to what the extent that I think or most of us think it will be, like a real human. But I'm quite confident that the Tesla team is already very capable of running the EV side of the business.
Yeah, actually, I look at this question. I don't think this Optimus and FSD is actually get prioritized and not launching. I think I would say they are not launching so many models, but they are prioritizing in terms of ramping up the current models. I don't think there's any conflict with these two, because these Optimus and FSD, these are the software part, right? So it's maybe not so much overlap. But let's say if you go and launch other models, right, it will affect in terms of their current productions. So I think that's to me that's definitely good. As in, if they really focus on the production, right, just focus on the Model 3, Model S, and Model Y, right? If all this work out, I think the financial number will look much better this year and next year. That's my take. Okay. Next.
They are not able to meet the demand, so I don't think it's. I mean, you can sell the Model 3, although it's a premium vehicle, right? Although you cannot address all the markets, but you are already unable to serve your market. So I think it's quite prudent, at least in this year and next year, that they do not put too much effort into launching a cheaper vehicle, which may affect their supply chain, affect their employees and their factories. So I think it's a good call. There may be people who are disappointed, but I think it's a good call on the business side.
Yep, totally agree. I think the next question, let me read it out. Elon not announcing another new factory until end of the year and delaying other models. Will Tesla not achieve its guidance of 50% growth rate in 2023, which is next year? I think we touched on this, right? Do you have anything more to add?
No, I think just now someone asked already. So I think Jeremy asked. Yeah, so I think I'm confident because if you look at the historical data on how Shanghai can ramp, so I'm actually pretty confident with 2 new factories. I think they can still do that 50% growth rate.
Yep, thanks. I also think the same. Okay. Next questions. Anyone able to share their DCA strategy in Tesla? I think this is quite interesting. DCA means you just buy on a constant interval. Like, for example, if you are able to buy one, regardless of the amount, you can buy every month, right? If you say cannot buy every month, you buy every quarter, also considered DCA. The key is you just execute it on a fixed interval that's considered DCA already. There's no I don't know what more to share here, So
yeah, DCA itself is a strategy already, so I don't think there's anything. There's any like fancy things to do lah. So it's just you set your interval, right? Set how much money you want to put, and then just do it, lor. That's all.
Yep. Wow, this one first time got this question. So any insightful thoughts on Seagate Technology? Anyone know about this? To me, this one is closer to commodities already. I don't know. I actually haven't really looked into the details, but no comment from my side. Anyone want to comment? If not, we skip. Yeah, I think the last question is quite interesting. What do you consider when constructing your portfolio? How much capital to allocate to different stocks? I think this is... let's go one by one for anyone who are able to share. I'm looking at, let's say, Kelvin, YCX, Maximus, Yixman, if you are willing to share. Anyone?
I think it depends on every person. I would suggest this person who asked this question to look into portfolio management, portfolio risk. Read a bit about that. So I'm not I don't want to share what I'm doing because I would say my financial situation may be different, right? So everyone has their own financial situation. But I can confidently say that I'm more than 50% in Tesla. So, but the rest I have in different stocks, and I would say the allocation is more on different asset classes, not really just stocks. But if you say just stocks, I'm very bullish on tech. So it depends on what is your risk portfolio and how's your financial situation. So if you are sometimes it's not to say like trying to be polarizing or what, but it's you need to very difficult because like even if you say like conviction, right, it's like so hard to quantify that, right? So to me I think you should start by reading a bit and see what constitutes a portfolio, right? It's like what is balance, even is diversification is too much, is it good, is it bad? Okay, so that's what I know lah. I'm not educated in finance, right? So I cannot. I'm afraid to say too much. So I'll let others chime in.
Anyone else want to comment? Hayden, you want to share? How do you allocate?
I think it's all personal preference, and your risk threshold. Also dependent on your income, and your. Yeah, I think it's very subjective. Very subjective.
Yeah, thanks.
I have an easy framework, and the easy framework will be when you ask this question, right, what do you consider when constructing your portfolio and how much capital to allocate to different stocks, right? The key thing that to begin with is what was the trigger that make you want to invest. So you should start from the first principles, whereby you think about what was the trigger, and then you think from there your trigger, right? People have many different kinds of triggers. So some people might just be saying, oh, my trigger is just to beat inflation. Some people might be saying, oh, my trigger is to retire in the next 10 or 20 years, that kind of thing. So it really depends on what their triggers are. And then once you know what their triggers are already, they're like, because ultimately it's a self-discovery journey, right? So once you understand what your trigger is, then you kind of identify what is the milestone for a particular trigger. So like maybe your milestone for a trigger is that when I say I want to stop working in the next 20 years or in the next 10 years, right? Then you think, how much money do I need to stop working? Then what about my expenses? Can I roughly extrapolate what my expenses are? So this kind of thing is more of like financial advice kind of territory really. But ultimately speaking, investments is all about understanding yourself more than it is about understanding the markets. Because markets over time is predictable. It's just that the short term is very unpredictable. Although over time predictable is also questionable. So, but over time is usually more predictable than short term predictability. So if you have like a longer term plan and you have clear goals on like 10 years, I want to have this sum of money. What do I want to do with this sum of money? Maybe I just want to put this entire sum of money into buying my bungalow or something like that. That kind of approach, right? Then it becomes clear what kind of plans and what kind of investments you want to put in. And then once you have that concept down already, then you can start to look at your things like your income, look at like what do you have existing on hand as your assets. It's easy if you are young and you don't really have any assets and you just have income. Then that way you can easily just start and do your own DCA kind of things, or do whatever you want to try out early on to understand. Because most of the time people who start out, right, they don't, the key thing is that they don't understand their own approach to wealth or approach to assets. And once they understand their own approach to assets, they understand their own risk preference and what they like, what I usually say like what hill they want to die on, that kind of things. And once they are fundamentally believed in that already, right, then it's a very simple decision to move on in this area lah. That kind of understanding, because your long-term view shouldn't be changing like every year or that kind of thing. So your long-term view is probably like a 5-year or 10-year kind of plan that you just do. You focus on your life and day-to-day things, and your 5-year plan is something that you review like maybe every 2 or 3 years or every 5 years, that kind of things. So this kind of thing is more of like a case-by-case basis, and also if like you probably need to talk to someone whom is able to ask you these kind of questions, right? And then you understand your own financial situation better, then you can make this kind of decisions. Otherwise, you say like, oh, constructing portfolio, there are those kind of like what 3-3 or what 6-4 or that kind of allocations, what 6-4 stocks and bonds or 3-3 stocks, bonds, cash, or whatever kind of things. Those are all just they are marketed to a certain type of people with certain kind of portfolio structure already. So they might prefer that kind of products. But in this day and age, where more and more people are more in charge of their own finances, right? It's hard to just subscribe to these kind of products, especially when you're not sure what the people who are doing all the macro forces might just change or might just force you to take losses, you know. Like recently, I mean, within these 2 years, there has been the trend whereby the Federal Reserve literally just force all these funds to take losses if they have a fund mandate where they are 6-4 stocks and bonds, because the four bonds, they're getting like so low yields and then but they are mandated to buy the bonds, that kind of idea lah. So that's basically I gave a few like rough questions that you have to ask yourself to understand yourself more, which is, what is your position, what are your goals, and then once you know your goals, you know what is your income and what is your income roadmap ahead, and then things are more clear. That kind of idea. Yeah.
Thanks a lot. I think sometimes I also wonder this YCX, do you like from the financial industry or not? Because if you go and study like CFA level 3, right, the stuff that you just said, right, is actually, I mean, very in line. They are basically the same thing. They even have a framework to say, okay, whenever someone have a question like this, right, so there's a framework, and the framework is always start with, okay, you have to define your objective, and then you have to understand the return expectation and risk constraint, and then other type of constraints or specific circumstances. Those kind of things is like, I think you remind me of all this stuff that in the textbook, you know. So I wonder where you get all those, all this good stuff.
Actually, usually it's just through my own reading and through my own reflections in journals and things. So I reflected on all this kind of stuff, and it kind of just comes just naturally just trend towards this kind of area, because I kind of have to project and think how a 20-year-old might think, how a 30-year-old might think, how a 40-year-old might think, that kind of things. And like at the different stage of their lives, what kind of expenses that they have, and these expenses will change their thinking, and how their peers think will also change their thinking, all that kind of things. And for me, I'm kind of like an outlier, because I am like kind of like, it's a very Buddhist kind of way of doing things. So I don't really care about all these expenses kind of stuff. So my expenses is actually very low, but that kind of allows me to also just think through what are all the trends what are the different narratives that affect different people at different ages of their lives. And
Well, CX, you sound very wise, and I really appreciate what you have shared. I also I agree very, very much that we first have to define, and in the end also we have to be true to ourselves. What is our objective? Because there's no point saying that I want to like get all the riches in the world, and then you are not willing to take risks. So that's a very, very good pointer for what you have shared. And I hope that the person who asked the question also can take the points there, and then you read further towards the different kinds of portfolio to construct yourself. First, you have to ask yourself, be true to yourself, really understand what is your goal, because there's definitely a risk to everything, and there's no free lunch. So you have to expect, you have to have a certain expectation of what you have decided to do, and then as you go along, you learn and reflect again. That what YCX said.
Yeah, thank you.
Yeah, thanks a lot. I think for me, I just have one idea. This is what I usually do with my friends. Sometimes they will, like, when we private message each other, sometimes we talk about all these allocations, right? The one idea that I have is usually just to ask the person, like, actually, what's your current holdings, right? So you list down your holdings, and then you list down what's the market value, current market value, regardless of how much you bought them at, right? So you just list down, and then you just plot a pie chart so that you visualize it. Look at the portfolio, and then you just ask yourself whether you are comfortable, whether this is the portfolio that you want. I think this exercise sometimes is quite interesting, because you would think that your own portfolio, how come you don't know one? You need to like plot it out to see. So weird, right? But apparently there are quite a number of people that actually don't know how their portfolio looks like before they actually run through this exercise. Sometimes people will just say, okay, let's buy this company XYZ, just buy, and then, it drops, right? So I cannot sell already. I don't want to lock in the loss, right? So I just hold it, and then I just collect the other stocks off, then collect another one, then let's say second stocks shoot out, and then they sell it. Okay, and then the third one drop. Okay, they park it, but they just keep on collecting these companies in their portfolio without like really put on a focus on like or aware of their allocations. Once they plot it out, right, look at the pie chart, they will say, oh shit, actually I have so much exposure into this company that I actually not bullish about anymore, right? So in that sense, I would say just look at the current allocation, visualize it, and then ask yourself, like, if you start from scratch, then what's the allocation that you actually want, right? So that's another different question. And once you answer that question, then you just compare and just ask yourself, like, how long you plan to like transition from your current allocation to a target allocations that you want. So that target allocation shouldn't be something that you shouldn't be affected by what you own, right? It should depend on your forward-looking assessment on how to allocate. So that's something that I share, because even for myself, the first time I run this exercise on my own portfolio, I was also a bit shocked. Not a big shock. It's just that I think that time also is because my money is sitting in different brokerage account. So I don't know, like, relatively speaking, which one is bigger than which. until I consolidate everything and plot it out the pie chart. Then I know. So I think that helped me with like to go through this process. I think that's
I think that is a great idea. That's a really great idea. I want to add on that also for just now, those things that I say are more of like for a broad range of things that people with, I guess it applies to, is a very general approach to allocation of portfolio. I want to kind of address like to young investors and also to the generally speaking, like what I would consider the Zoomer or millennial crowd, right? That nowadays are more investing, which is that what they are usually looking at is more of like what is in fashion right now, which is maybe you go on Wall Street Bets or you go on whatever TikTok or other places and you hear, oh, these are the stocks that people are talking about, you buy, or you visit like crypto and then you see, oh, these are the cryptos that people are buying, and then you decide to buy some, and then it went up like 2x or 3x or something, then you feel like, I'm making a lot of money, that kind of things. And then the idea is that it is fine to do these kind of things when you are young and you want to try out all these things. But the idea is that when you do try out all these things, the most important thing is to actually record down your thoughts, right? Whenever you buy or sell a certain thing. Because when you make a buy or sell decision, right, if you are able to write down, like say, what are like the thoughts that are going through my mind that led me to this particular buy or sell decision, right? And you record down, and then over time, you will kind of see and understand the different patterns that affect how you think. So like you'll start to see what are the narratives that actually change or cause you to buy or sell. And then once you write it down and then you review through it, right, then you realize, hey, am I actually falling into some kind of narrative again, or how true is this narrative? Can I learn how this narrative might play out this time, or that kind of things? Then you start to observe more, and you become more savvy with how you put your money in all these new stuff. And then the other thing about like say crypto itself is that, or rather crypto or stocks are together, right? It's more that I always like to look from an observational kind of approach, which is that what I mean by observational is that you use the products and you actually understand how the products are, you understand the pain points of the products. Like for example, you use the iPhone and then you think, wow, the iPhone is so good. Oh, but the iPhone has all these bad points and like that. Then you think about it and then you probably research on, say, the goods and bads of iPhone, and is it reflected in the stock price, or are these defects or things, are they praised in reviews or stuff like that by people? And then you kind of like see over time, you understand from this. Like the same for crypto as well. Like let's say you want to buy a particular crypto or things, and then when you buy already, you hear that they say have all kinds of smart contract or all these things that you can try out or do, right? You at least go and try out and do them, that you so that you take it as like a learning journey as well. Like maybe you put in $500, and then since you put in $500 already, you might as well play with your $500 to see how exactly does this so-called DeFi or whatever crypto system work, right? And what are the steps to do through it? Then you kind of understand how it feels to do a particular transaction or use a particular product. Then that way you learn from there, and then the future things that come in, you can have a more objective view on how to actually evaluate all these kind of valuations. That's what I mean.
Yep. Thanks for the sharing. Just now, there's one part that I say it slipped my mind. I forgot what I want to say. Right? Now I reminded myself already. Just now we were discussing the Yixman. Just now you talked about why Tesla wanted to insist on using only visions, right, and not LiDAR, right? Actually, I think he's not really bearish on LiDAR. The point that I want to make is that he is very bullish in terms of the brain of the autonomous technology that they have, which is all the machine learning training dojo, this kind of things. So he is very, very bullish on that. So I think this one, whenever we talk about autonomous technology, right, we keep on circle, and we come back to this point again, whether the vision only, this approach or this philosophy, whether this is the right approach. So I also don't have an answer now. I think in the coming, let's say, years, right, we will see whether which one will come first, right? Whether the FSD will be solved first, and that, or whether those that use LiDAR and so on, whether their costs will come down much faster and more economical to run. So I think that's the take. I just want to close that before we end the call today. Okay. Anyone else have any closing statement? Anything you want to share before we close the call, because it's now 11 plus already. Okay, no. Then let me say thank you so much to Maximus for the presentation on the financials. I think that's definitely helped us to understand their trend and progress, and also to everyone who joined, like Kelvin, YCX, so many Yixman also gave quite a number of points. I'll have to really listen again to capture all the good stuff. Thank you so much for coming, and see you and good night.
Okay, see you guys. Bye.
Bye-bye.
Thank you so much. Bye-bye.